Yo, good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we've got a pretty killer episode, guys. Starting today, we're going to be extending some of our Market in the Morning live streams into the New York session so we could take some live trades with you guys and show you the benefits of trading with market while you're trading, guys, because it's important, especially in these current market conditions, that we have some type of news outlet or some type of fundamental source like market that gives us the insight of what's going on, especially during times of war. There's high escalation, lots of uncertainty, so we need a tool just like this. So I hope you're ready. Hit that like and subscribe button because Market in the Morning starts right now. All right, guys. So first things first, guys, we do have some economic data today. So let's prepare for that right there. We're going to come over to our economic calendar. Now, before I do dive in, I want to give you guys a little bit of a roadmap into today's stream. Now, unfortunately, Jeev is going to be out today. Jeev was supposed to be in, messaged me last night. He had some stuff going on in his personal life. It's important, and what's great about trading is it gives us the opportunity to take those days off without having to answer to anybody or figure things out. You're able to say, okay, nope, I need today. So make sure you run that like button up for Jeev. Make sure he gets tons of love. He knows that we miss him, but we will be joined by Nalab around 8:45 to 9 o'clock. And like I said, guys, we're going to be running the stream till about 10:30 today. So we'll get some New York session in. We'll get some good price action and volatility and set you guys up with some nice trade setup. So drop a good morning if you're ready and let me know what tickers you guys trade. And let's cover some of these fundamentals that we're preparing for today at 8:30. So it looks like we have durable goods today, and that's going to come out at 8:30. We have initial jobless claims. Now, initial jobless claims is a high priority, but we have to also understand that initial jobless claims comes out every Thursday. This is not the biggest of impacts. Good morning, guys. Hello, hello. Good morning, Abram. Good morning, Ozzy, Austin, Andrea. Good morning, everybody. Welcome. Hello. Love it, guys. The OG group is here. Keep the good mornings coming. Keep the good vibes going, man. It's Thursday. We're excited for the price action. This week has been a little choppy, but the trade setups me and Imre set you up with yesterday on gold played out very well. I'm going to show you that very quickly. We were looking for a rejection off the 4,500 area, right? And look how great that played out overnight last night. Really great stuff there. Extremely important you guys join these type of morning streams to prepare you for the day and give you the proper insights that you might be missing. Now, we have durable goods. We mentioned that. Initial jobless claims is coming out. PCE is coming out. We have GDP deflator. Now, GDP is not, this is not our original GDP right here. So do not think this is going to be that big of an impact. But the fact that we have multiple economic reports and events coming out at 8:30 does signal to us that there is going to be an extra bit of volatility. Now, if you're ever looking at the economic calendar and you're wondering, well, what is durable goods? You can hit the brain icon and it's going to break it down for you. Signal strength of manufacturing and CapEx cycle. Now, CapEx cycle is extremely important, guys. Right now, big companies, big tech, what's really holding up the S&P and NASDAQ markets and really the global economy at some point too, is where big tech is seeing their revenue. A lot of people are debating that NVIDIA's $80 billion in revenue isn't true revenue. But a lot of people are also arguing that CapEx only really makes up about 20% of that. So it's not like they're inflating their price so much, but they might be cycling in some of that profit too. However, NVIDIA did announce an $80 billion buyback on their stock, which does show and suggest that the cash flow is real. Now, this also feeds into GDP equipment investment, can briefly move yields and USD intraday. Now, this is important, guys. Yields are known to be an inverse correlation to stocks. If we do come into some type of yield issue where yields start to climb, what that does is it shows investors, not me and you, multi-million, multi-billion dollar investors that, hey, you could lock in a 5% return for, let's say it's the 30-year. You could lock in a 5% return for 30 years. Don't you think that these big companies, these big investments, these banks, these mega tech companies, wouldn't they rather be safe than sorry and put their money into something like a yield versus something like a high volatility stock, something like a new AI company that might be overvalued? So just something to keep in mind. A weak trend may revive hard landing worries. So that's important too, right? A hard landing with inflation and rate cuts. Iran attacking Kuwait. Yeah, let's see. Things are heating up. Let's go over our economic calendar. We do have just a few minutes for our news. I want to run through some of the cycle of the economic data to give you guys that insight and set you up to really understand what these events mean. And then we're going to go over some of the big headlines that came out. Like we've been talking about the past few episodes, we've been getting a lot of new escalation style headlines where it's not really agreeing with the headlines that are saying a peace deal is being made. So this is our durable goods. And what's great too with market, like we pointed it out last time, is your impact on used to be just set for USD, but now you could actually choose from your watch list what do you want to see it impacts. So if it's above higher than expected for durable goods, that normally has a bearish impact on the S&P 500. But for gold, same thing, has a bearish impact. USD, it has the bullish impact. Yep, another day. That's it, man. That's it. Every day, man, our goal is to get 1% better. Whether you've been trading for a day, you've been trading for a week, you've been trading for 10 years, you're still looking to get better. You're still looking to adjust to new market conditions and environments. And market, MRKT, really gives you that insight and that go ahead to say, yeah, look, things are starting to roll over or things are optimistic and staying consistent. Guys, let me know what your thoughts are. Do you think initial jobless claims is going to come out higher than expected or lower than expected? This signals Fed labor market progress, early warning of layoffs, moves rate cut expectations quickly. Very important to know. Right now, guys, if you asked 4 or 5 months ago, oh, are we going to cut rates this year? The odds would be very high that we'd say, yes, of course, we're going to get a rate cut, possibly 2 more rate cuts this year. The Iran war started. Oil prices accelerated, gas prices got higher, and inflation followed. These are all bearish signals and a negative impact on a rate cut. And at this point, it's actually moving the odds closer to a rate hike towards the end of the year. But overall, it is still looking at about an 80 to 90% chance that we hold rates steady. So nothing major, no big catalyst just yet in terms of where the Fed is standing. Now we do have, let's see guys, we have about 1 minute for this economic data. What's cool with market is it does have the countdown. While that countdown's forming, we are going to pull up our Fed Watch tool. I'm going to show you really quick what I meant by the odds of a rate hike versus rate cut. So when you use the Fed Watch tool, you look up Fed Watch, you want to come down to compare. When you come down to compare, it's going to show you where was it a month ago versus where is it now. So if we come over to December, we see that December, at some point, we were looking at an 80% chance that we hold. 1 month ago, it was an 80% chance we hold. Now it's only a 40% chance that we hold steady at 350 to 375 on our interest rates. But look at that, a 40% chance that by the end of the year, we get 125 BPS interest rate hike. Very important to be aware of this, guys. 8 seconds. Let's see where our economic data comes out. Guys, drop a good morning. Drop the symbols and tickers that you trade below, and we will get to them and find some price levels. Bang, bang. Look at that, how quick market brings that out. Look at that high durable goods there, man. That is huge. Huge. 7.9% higher than expected. Forecast was 3.5%. That is over 2 times their expectancy on durable goods right there. That is a big beat, right? They beat it. They were above it. We have to keep an eye on that. Same with initial jobless claims. Higher than anticipated. Forecast was 211. Actual was 215. Max was 216. It is still within range. And durable goods, look at this, guys. Minimum was 0.5%. Max is 9%. Well, as much as it is double the forecast, it's still within range. PCE, you can take a look at our PCE year over year. Okay, that's good. That stayed about within range, 3.8%. Core PCE month over month, it is lower a little bit. What else do we have? Anything else major? We do have new home sales at 10 o'clock. That's not going to be the biggest event. It's not going to be super impactful. Markets aren't going to go off the rails for new home sales. I didn't mean to rhyme there. But it is important to be aware of. So we'll keep an eye on that, and because we are running the market in the morning stream till 10:30, we'll be able to cover it for you guys too. So let's take a look at what this says and what this means. It is higher than expected. We can look at our ES, and if it is above, it shows a bearish, right? Above is bearish. For ES, though, on initial jobless claims, above is bullish. So now we're getting contradicting economic data, right? So let's take a look at the chart and see if anything has changed on ES and NQ, any major moves with that volatility that came in. And right now, we're getting a whole lot of nothing. Take a look at this, guys. Markets gave us the smallest of moves higher, only about a 5-point move on the ES, and then made its way back lower. Again, these are not big economic events like CPI or PPI, even when it beats the extremes, or NFP or unemployment. Those are the big economic events that will move markets. And as you guys know, we will have a market in the morning episode covering those days as well. So let's mark out some levels on ES today. The green zones that you see right here are the levels that me and Imri left for you guys yesterday. And take a look at how price reacted to them yesterday, right? So we were initially looking for a reaction off this zone. Price failed. But our second zone that we had right over here, price ended up giving us a double bottom. I did not take this trade myself. I ended up taking the day prior the trade over here that we called out, and that was a very nice trade. That was from the lab and myself on Tuesday. That was a great trade on the ES to move higher. This one, I did try a stab at some longs over here. It did fail. Small stop loss. It's important, guys, that you manage your trades, not just your trades, but your risk. When you enter a trade, you have to almost be prepared for the loss. When you take a trade and it starts running against you into your stop loss and you're worried, you're freaking out, and you want to stop out, you probably sized too heavy. You should be able to see trades go into drawdown without freaking out, without being worried or concerned. And same goes to trades moving into profit. You shouldn't, if I'm in a trade, for example, guys, if I'm in a long position from down here and my stop was at the low and I wanted to target the previous high we had from pre-market right over here, and all of a sudden we're in profit and I'm like, oh my goodness, wow, this is amazing. I'm up 4 points. I got to take profit here. What you're doing is you're really going against your own system, and you're going against your trade journal and your trading algorithm yourself. If you're looking for 2-to-1s, 3-to-1s, and you're cutting them all at 1-to-1, you're cutting your winners short. What you should be doing is cutting your losses short and letting your winners run. So if you do feel the need, like, oh man, I'm in profit, I need to take profit here, there's a good chance you were in too heavy on size. Kevin, what kind of simple confirmations do you love to see on your areas of interest to take an order on entry? First off, fantastic question. Second, I love that you're calling it an AOI. I call them an AOI myself, area of interest. Now, it definitely depends. I'm a big fan of a tool called Bookmap. That is an order flow tool, and that basically shows volume based off of bubbles, and it shows heat maps too, which would show you passive buyers or sellers. So what I like to do is I like to line up those passive buyers and passive sellers along with my market levels that I have marked out already. I am going to move this off the chart for now. We don't need this. I'll put it on another screen. And like I mentioned before, guys, because we're running into the New York session, I'll keep that available and I'll keep you guys updated on the reactions to the levels we've come up with. Right now, though, I'm much more interested in seeing us delete this zone. And the reason I want to delete this area, guys, is because it's called marrying a zone, right? Almost like marrying a bias. We never want to marry a bias or marry a zone because market conditions are constantly rolling over. So this zone that was support right here, markets completely dismissed multiple times where we just ran through it up and down, up and down. So what does that tell me? It tells me markets aren't interested in this zone. So why should you or I be interested in this zone? A much stronger area that I see price has been reacting to has been over here. We see that this is now our new resistance point on the S&P today, around 75.50. XAU USD, we could definitely cover some gold. Know a lot of great gold traders over here. Guys, drop a gold if you're trading gold today. We got our flip watch tool over here, a little secret sauce for you guys. Let's see. So guys, let's break down some ES fundamentals real quick. Go over some breaking news. US core PCE index rises 3.3% year over year in April, surpassing estimates in previous 0.3% levels. Now, guys, you're a new trader, you're a new person, you're new to market, and you don't know what a headline means. That's okay. Market's going to break it down for you. This little brain icon right here, you click it, and very quickly, is it going to bring up some type of idea and breakdown, right? Your market AI analysis. A 3.3% year over year core PCE print above estimate and prior level signals stickier US inflation. Now, guys, because we're using market daily, because we're coming back, or you're coming back to the market in the morning shows, you know that we have sticky inflation because of the higher oil prices, reinforcing expectations of a more hawkish Fed and higher for longer rates. We were just covering this before, guys, right? We understand higher for longer rates are because of higher inflation. This is broadly bearish for US duration and growth equities, supporting the USD and a headwind for gold and crypto amid already fragile sentiment from geopolitical tensions and elevated energy prices. So it's almost like a domino effect that we're reading here. Higher inflation leads to higher for longer rates, leads to a headwind for gold and crypto because of higher energy costs, right? It's a domino effect that we're seeing in the economy, and we're seeing it in real time. And we're not blind to it because we have such a beautiful terminal right here that tells you everything you need to know. And guess what? I find this extremely important, extremely interesting. I'm hitting it with the bookmark, right? I want to know, and I want to keep that in my bookmark tab over here so I could circle back to it and look back at the past month of bookmarks that I have. US core PCE rises 0.2% month over month in April, below 3.2% previous, an estimate of 3.3%. Let's see, any other big headlines right now? Now, what's cool too with market, guys, is it gives you your news feed and it separates it from all, popular, breaking news, and high impact. So breaking news is great because it separates from all, right? So there's your first filter. It's a breaking news. You should always have your breaking news tab up when you're trading during the day. And you should also always keep your high impact noise, just like that one, available so that if you have market in the background, let's say we're charting the S&P right now, and all of a sudden we hear that noise. Well, guess what? We know that a new headline came out. So we're going to jump over to market and see what exactly came out. Awesome, guys. Yep, market is the best. Yes, sir. XAU USD. The US-Iran conflict made us understand fundamentals better. That's very true. That's an interesting way of putting it, right? A lot of people, traders, non-traders, completely blind to fundamentals. But now that the Iran war is picking up, a lot of people who were possibly even younger during Trump's first presidency are becoming more aware of what's going on. And the Iran and US and Israel conflict is now picking up and forcing people to engage and understand more about fundamentals, something we haven't seen in a very long time. Now, something else I wanted to mention about the news feed, guys, is you could even look it up with search, right? So we're going to hit our search tab. I'm going to go over to high impact. And all I want to look up right now, and what we should be looking up every day when we're trading, is just the term Iran, right? And the reason we want to look this up is so we could see any recent headlines that go over Iran, right? Is there going to be some type of war? Was there a conflict? Was there an escalation? Were there any peace talks? Now we could go through it. Russian Foreign Ministry on Iran conflict. We urge not to slip back into armed conflict. Kuwait condemns Iranian attacks on its territory on Thursday. Okay, so there we go. Iran was attacking Kuwait on Thursday. We were aware of that. We even had one of our homies here in the main chat mention that as well earlier. Think, where was that? Where was that? Yes, sir. Yes, sir. That's all. That's it, man. Team effort here. Guys, we are a community here in the market in the morning stream. So again, make sure you like, make sure you subscribe. I host these Tuesday, Wednesday, and Thursday. And the more of you that join, the more we're going to be inspired and driven to do this Monday through Friday for you guys. And I would love to have that as an opportunity for you all to join me, take some trades, and really be aware of what's going on. Yes, sir, Rita, you already know, man. Rita's one of the best guys on the back end we have here. Nick, you too, you already know. May was a banger, yes, sir. Yeah, guys, share some trade ideas that you have as well. I'm going to share some trade ideas off of the levels that were presented here on market too. Same with all the fundamentals and breakdowns as well. So what do we have? Iran RGCC says Tehran is controlling and managing the strait. Now, something else to note, guys, because we have this terminal on hand, we're seeing a lot of this person controls the strait, that person controls the strait. Let's be straight with the straight, guys. Nobody's in control of it right now. It's up and down. There's a blockage, there's a blockade, there's no blockade. There's clearly still some type of impact that's impacting oil prices and the supply issue right now. What does a supply deficit do? It's going to create higher prices. That is why oil is refusing to come back into its range. I'm going to show you guys oil right now. And after we're done going over oil and some of these other aspects, I do want to cover gold for you guys. I see a lot of people asking about gold right now. So oil is just a chef's kiss, man. We were trading up here, and this is, look at this, guys, Monday and then Tuesday. This Tuesday right here, I was on with Nalab, and we were mentioning, listen, we're at the top of our range right now. While people who don't use support and resistance, people who are trading blindly, they might look at this and go, oh, look at this. Oil's moving higher. We're about to break out higher. But they're just not looking at the real technicals or real fundamentals here. You have to look at the level, and you have to understand that price action is a response to fundamentals. Well, guess what? Every time we come into this zone on oil, we don't just reject out of nowhere. We get some type of headline that provides that reaction. So guess what happened over here? Trump came out and said, we're finalizing a deal. That finalizing a deal at the top of the range helps oil push back lower 15% from the recent highs we were just at. That does not mean oil's moving back lower to its range. Take a look at oil over here, guys. This is where oil is used to ranging. Between 48 and 57, that's where it was most of 2025. That's also where it was most of 2024, was between 50 and 65. Very rarely does oil try to break above and hold above 70. Last time we had that was in 2022, and that was also during some type of extreme situation. But look at this. Something to point out. It does not last forever. When oil finds these extremes, it ends up coming back to its original range. But the higher it stays and the longer it stays higher, the bigger of an impact it has on inflation. Now, I'm not expecting oil to remain between 80 and 105 for years, possibly for a couple months, but at some point it is, and hopefully it will come back to that range. But the longer we do stay higher, the better of a chance and the more of a chance we have that it can break out to the upside. Absolutely, guys. Yes, sir. It's a pleasure to have these streams with you all. Like I mentioned before, guys, this stream is today going to go through 9:30 to 10:30. So we're going to have a full hour of the New York session open. We'll possibly take some trade setups together, the ES, the NASDAQ. We'll really set things up and give you guys the best opportunities today, man. So again, run the like button up. Absolutely appreciate all of you for being here. Yup, the deal was never reached. That's right. That is absolutely right. No deal has been reached yet. I see a comment, GER30. So let's check. Let's go over gold real quick. And then I want you to drop any other tickers that you are interested in. So I usually go over GC, which is gold futures, but I know a lot of you in here trade Forex. So we'll do XAU USD. Now, please understand, both of them are going to have very similar fundamentals and breakdowns. So what's going on with gold? We could always start with our chart. Yeah, CL, we just covered some CL. If you want, you could probably rewind about like, say 5 or 10 minutes. And that's when I was going over the range of oil and where we're expected to go from there. So right here, what do we have, guys? We have gold chopping its way lower. We see that it's been moving lower. But what gave us this big driving factor right here? Well, with market, we could click this 9 p.m. to 10 p.m. candle, and it's going to tell us why. Iran strike headline reversed into a sharp risk off gold liquidation. So gold has been bid on Mideast escalation headlines before the hour. Bid means holding or bullish. US strikes on Hormuz tensions were the main geopolitical backdrop, right? So we're able to just click a candle and it tells you why. I'd say what other platform does this, but I know what other platform does this. None of them. Fed Jefferson sounded inflation focused and not dovish, supporting the dollar. So if it's supporting the dollar, guess what happens to gold? Because they're more of an inverse correlation asset to each other. If the dollar's moving higher or stabilizing, gold is coming back lower. Yes, sir, we're going over XAU USD right now for you guys. All right, so let's see what else is going on with gold. What could be impacting gold right now? Well, what's great is instead of having to go through the breaking news to try to figure it out, we could scroll down over here to our bias and calendar events, and it's going to tell you the day trading bias on XAU USD is slightly bearish, what's supporting the bias, and what could flip the bias. And what's great too, guys, is it's going to give you different information depending on if you're on swing trading or if you're on day trading. How cool is that, man? Extremely sick platform. If you don't use Market already, make sure you sign up today. It is MRKT.ai, and you could use discount code KEV to save 10%. So what's supporting gold to the downside? Hawkish Fed repricing from core PCE, right? We went over the economic data. We've been going over the inflation. We even went over our Fed watch tool, right? And all of these are now leaning more towards a Fed rate hike. So be careful there. Gold is still seeing stronger selling pressure than it's seeing buying pressure. US-Iran strikes revive war risk. Again, things that we've covered that we're aware of, but if you're new, you're trading alone, you're able to see everything that I'm looking at right now on your own. You don't need to go to school for fundamentals. You don't need to go to school for economics. If you're a day trader, you should understand what's fundamentally moving markets, because there's a reason these are called financial markets. And there's a reason there's billions to trillions of dollars being exchanged day after day in these markets, because it's an extremely smart place to be. And we want to be aware of what's really the overall picture. Yep, that's right, man. That's right, Nicholas. Be careful for the usual damage control tactics. That's it. That's it. Especially when we were looking at that oil at the top of the range, we get a big headline that brings us back lower. All that is damage control. When I see a headline that's like, oh, we're a peace deal, finalizing a peace deal, I laugh at it. I tweet about it. I say, wow, that's great. We've got our 287th peace deal. I'm so excited. This is definitely the one. Not. What happens? Markets give us a small reaction. We trade back to the bottom of the range. The retail traders who don't have a tool like Market, guess what? They do believe that that peace deal is going to work. I saw people posting on Instagram, on Twitter, wow, we're going to have a peace deal finally. I told you guys the war is ending. Guess what? They're right until they're wrong, which, to be honest, they're wrong right away, right? Because we know that these headlines hold very little until there's actually some follow through, until both sides actually confirm and acknowledge the peace deal. Right now, Iran does not want to give up nukes, nuclear energy, nuclear nothing. They do not want to give it up. US seems as though the US and Trump are not, and Israel are not ready to sign a peace deal until they do. So just a few things to be aware of. The war is not ending anytime soon. I do believe, personally, I believe it's going to drag on towards midterms, even possibly through midterms, so that Trump can sort of use this as a catalyst himself. Who knows, maybe they'll end the war right before midterms, so he could do what he does best, and that's pat himself on the back and say, I did it, guys. I ended the war that I started. It's not, I don't know, man. It's a matter of understanding who's in charge right now and understanding what they've been doing. Yeah, welcome, bro. You're absolutely right on that. So far, when gold made a new lower low, probably damage control happens with an aggressive pullback. Yeah, yep, exactly. Exactly. If we're looking for gold or something like that, here we go. Sticky inflation risk keeps Fed cautious. Let's go over some key levels. Let's set you guys up with some levels on gold today. We will look up XAU USD and we'll mark out that chart for you guys. Now, guys, for myself, when I was looking at GC, which is gold futures, I was very interested in looking for gold to start to sell off. GER 30. Yeah, we could look up GER 30. Nick, do you mind letting me know what that would be under market? Because I do believe, what is that? That's not the DAX, is that German? But we'll see. All right, first, real quick, XAU USD. What do we see, guys? Very obviously, right now, what do we see on the chart? Well, over here we had extremes. We had an extreme bull run. But now at this point, we see we're very range bound. We have our highs and we have our lows right over here. But where are we trading right now? DAX, I got you, bro. Absolutely. What happens? We find resistance, we sell off, we find support, we move back higher. At this point, we've been failing to move higher from here. Guys, we have a special guest, Nalab, joining us in just a moment. We're going to finish up some of this. Nalab's going to get his screen share going too, so we could ping pong it back and forth. And again, set you guys up with the best setups today, man, using market and really setting you guys up for success, as we will have the stream go into 10:30 today. So gold, what do we want to do as day traders? We want to follow the trend. We do not want to be trying to buy every single dip we see, or else we're going to be getting stopped out 1,000 times. I will say be a little extra careful at these extremes, as we see buyers have stepped in the last time we were down here. But overall, we got to remember, from a smaller time frame scale, we are day traders. We are looking for trend continuation. So guys, drum roll, please. Here comes the one and only Mr. Nalab. What's going on, bro? Happy Thursday.
What's up, Kevin? How's it going?
Dude, it's going good, man. We're killing it this morning.
Yeah, I can see that. I was watching it while I was doing some work this morning. So I was an eventful show to start off with. Great PCE release, as well as durable goods, the initial jobless claims, a ton of data. Do you see how fast it came out?
Like, bro, that was nuts.
Did you see? Yeah. I was also watching a news feed, and instantly we had the economic data headlines come in as well with the playbooks. So it feels amazing, man.
It was nuts.
Great day.
It was the timer was like 5, 4, 3, 2, and then just lined up right there, man. Yeah. Market number one, dude.
Yes, sir. Yes, sir. But all of our analysis from the week has been playing out. ES has been within that range from 7,500 to 75.70s has been the top end of it. But you can see that these pullbacks keep getting bought up from above 7,500. Overnight, we dipped a little bit lower into there, on S&P. And that's where I had my stop loss got triggered on that trade that I had, my second buy from 75.20s. I had the one on Tuesday that we talked about, and that played out beautifully all the way back to all-time highs. So I was able to take profit on that move on Tuesday, and then I reattempted it yesterday, right there. Yeah, exact same situation. Got almost right back up to all-time highs. In this case, my take profit was where the market's target level was, which was above 7,600. I was expecting ES to continue rallying through here and break into new all-time highs as we kept holding up above the 7,500 level, right? Showing me that, hey, there's still buying pressure. Markets are still very optimistic. Any escalation that has happened or continues to happen eventually gets faded out. But what these escalations do provide us is opportunity to get better, lower prices. Because let's say you see fresh escalations happening on the war front in the Middle East, you're going to see outflows in ES. You're going to see S&P. You're going to see NASDAQ. You're going to see Dow Jones. You're going to see oil. All of these asset classes are going to see, are going to be impacted by the headline. And what it's going to give you is an opportunity. Let's say you get a massive fresh escalation. Right. Quick pop quiz. What's going to happen to ES, Kevin? Little pop quiz for Kevin. If we see fresh escalation.
Oh, man, dude. Oh, man, pop quiz. I suck at these. Well, if we get fresh escalation, we've seen in the past, fresh escalations bring markets lower from that uncertainty.
Exactly. So that piece of information right there, if you know that if a fresh escalation happens, the market starts selling off a bit, but overarching sentiment we know is super bullish. Markets are very optimistic. Are you going to look for sells, or are you going to wait for price to bottom out so you can get in where the institutions or the algorithms are looking to position themselves? It's going to be the latter, right? Like, you don't want to be chasing. You want to be like a lion in the field, in the savannah, hunting. And some of the hunts are just a game of waiting. right? Like this play here. I got stopped out, but you can see how that ES is still very bullish. You can see it was just market doing what the market does. Sometimes it plays out in your favor, sometimes it doesn't. And that's why it's a game of probabilities. And as Kevin was mentioning at the start of this stream, it's hey, you got to go in with the mindset, I'm going to lose this money. And if you go in with that mindset, then you don't give a shit about what the market does. Like for majority of the day, I was up on this position. And then in the very last moment during Asian session, I got stopped out, but I just left it at that point. However, Kevin, do you mind if I share my screen?
Yeah, let's do it.
Awesome. But however, you can see that now this is a nice area of interest for us. This 7,500 right on the dot, a very clean area of interest. And we've also snapped right back above 75.25. So what this tells me is that, hey, this move down towards down here, some people may call it a lower, like when looking at just this immediate price, oh, we broke below this low. I'm not going to pay attention. I'm paying attention to this entire movement over here. And what this tells me is that we are very bullish, that even if we go down to here and come back up, or we go down to even 74.80s and come back up, that's a level Kevin has been mentioning the entire week as being a very key area. If we were to push further below on this gap, would be a good area where buyers jump in, right? Or if we just come back to 75.25 and continue towards the upside. What this shows me is that, hey, buyers are still in control. We dipped down to 7,500, snapped right back above, created a higher low right here, right, in the intraday time frames. And now it shows us, okay, cool. Now, if we start seeing some sort of price action where price comes here, maybe in something like this, then we could take that opportunity to ride those buys back towards 75, 70 range highs. And then we evaluate, okay, what could happen next? And what could happen next is if we get a break above here, then we can go into the 7,600s and create new all-time highs because the bias still remains bullish. It remains bullish with prospects of ceasefire deals still on the table, inflation data coming in cooler. You can see the headlines that got stacked, this bias, right? There's also more headlines down here. And then there's also things that could flip it bearish, and which is why we have the flip watch over here, which you guys will start seeing as more users were rolling this out to more and more users. But Iran launched a ballistic missile towards Kuwait that was successfully intercepted by Kuwaiti force. So you can see things like this have the potential to cause a bit of outflows to better buy areas. However, so you have to keep that in mind when you're operating in the financial markets, is everything is influenced by what's going on right now. And if you're not paying attention to that, then movements like that are so sporadic. Like yesterday, this move happened on a headline. You would have been confused. People would have been trying to buy ES at all-time highs here because all they were seeing was 1 minute price action of ES just pumping up all the way from 75.45 to 75.70. And this move got faded out where then the real buying started taking place down here. You can also argue over here as well, right? So if you had no idea what was happening here, I'm telling you, countless people got burned trying to buy into this high because all they saw was candles. They didn't understand the context of it, is that the headlines that we had come out yesterday with Iran saying, hey, in the next 60 days, there will be a new authority of the Strait of Hormuz, and they will be returning back to the levels of ships passing through as pre-war. These are all things that have been said before, but some people took it as direct optimism and they were getting burned trying to buy into here, expecting ES to break out higher. But the market had priced these words in a while back. These are things that were already said days ago. So the impact, short-lived. Is it enough to take us into all-time highs? Not yet. But that also tells us that sellers are really defending this area currently, until there's enough buyers in the market that outweigh the amount of sellers that can take out this price handle over here. So till then, buy still remains the same. That's why when this pullback was happening, we're like, hey, we're still bullish, guys. Doesn't mean just because this pullback double top happens here that all of a sudden we're going to pull back to 7,300 now. It's you would need a catalyst to take you down there. And that's what these price levels are all about. How can you push to 7,600? You click this brain icon here, find out. Or how can you pull back down here? The opposite would have to happen, the opposite types of catalysts. So the main point is that the markets are catalyst driven. These candles don't get randomly printed on a chart when you decide to show up or when traders wake up and institutions are placing orders. These candles show up because they are a reflection of what's happening in the real world. Price is a direct reflection of every event that happens. And then what ends up happening is that the market as a collective prices it in and reflects that as actual price. So the market is always right. It's a collective agreement of this is the fair value of what ES should be or what gold should be right now based off of everything that's going on. Just
Absolutely.
like how all market participants think of it like one giant brain decides this is the fair value of what the market that we're currently looking at. Just like that, we have to take into account every piece of data that comes in and weigh it and see, does this align fundamentally? Where were the prices? Where could it go into? And all of this is called fundamental driven trading. This is what real trading is about. It's not about coming to the charts and just staring at it with your mouth open, drooling for 12 hours. It's about being patient and understanding that there's a story that's being told on this chart when I look at it. And you better be able to tell what the story means. Like, imagine when you're explaining to your kids in a few years, for all of us who don't have kids, what this massive move is. Imagine explaining to your 3-year-old child, and he's like, Dada, why go up? And you're like, hey man, like this, I have no idea. It just goes up. But this is the optimism from the ceasefire deal, from the war ending, all the markets just being greedy, crackhead style optimism, delusional optimism driving the markets. That's the story here, right? What's the story over here? This is Trump going chaotic on the tariffs for across the world, right? What's the story here? Like all of these big moves and big instances are all stories that you must, and they're all chapters in your trading career, right?
Yep.
Like Kevin, you remember the times trading when Fed was hiking rates so aggressively back in 2022? Like that was a chapter of our lives, right? That was a chapter of our trading careers. I was so bad at trading back then. Like I had no like executions. You know what I mean? So it's a chapter of your life, and every single moment where you see these massive swing plays in the market, they're because it is long lasting sentiment based off of a few key headlines or a few key points or a few key events that took place that really set the sentiment and emphasis for the coming months, for the months to come.
Awesome. Awesome. We got a question for you, Nalab. How do you approach the risk management side in these conditions? Do you lower your risk than usual, or does risk stay the same?
Risk stays the same. Your lot size will depend, your position sizing will depend based on how large like the candles are moving or how big the ranges are. If you remember a few months ago, we had gold have these massive range plays. And in those range plays, we always saw was you would have to use a stop loss of like $20, right? A $20 stop loss on gold is pretty big, like
Yeah.
based on like movements that we were having last year. So in that case, you just lower your position size, use the same risk basis off of market structure, and then you can just like either scale in or scale out as it comes. But one of the things is not getting greedy in these conditions. That's something I had to personally adapt to earlier this year when gold was over here in these massive plays where you get so comfortable with riding one-sided sentiment, right? And some of these plays, Kevin, are so big from 5238 to 5400 in just a matter of 3 hours. Like these are thousands of pips thousands of points moving towards the upside in a short period of time. And what that taught me in that same moment is that anything that goes up will come down even faster. So you have to be able to manage your risk here, not get overconfident or greedy in these market conditions. And that was one mistake I actually made on this when we were having this pullback, was getting that overconfident and staying and getting caught up on the wrong side of things, because sometimes you tilt, and as long as you don't do it all the time, that's okay. Every now and then you'll have a moment where like instead of losing 2%, you lost maybe 6%, and that's just like hey, all right, let me just move on with my day. So risk stays the same. You just have to manage your position sizing, right? I'm not going to drop from like, let's say using like 2% risk on a trade to make 6%. I'm not going to drop that to like 0.5% just because of more volatility. Volatility just means more opportunities for us, right? When you see gold trending like this and you see 1,000 pips sell off. You know, if we have clean conditions, market pulls back, finds the next selling point, it's going to sell off again. You'll get the next extension. So it's a balancing game. Like even here, right? We had the sell off, another one, and then yesterday during Asian session, we had the final one that dipped into 43.50s. This key area we have also been talking about for a while. So when we dipped into here, now it's like, hey, I'm not going to buy into here. Sorry, I'm not going to sell into here. I'm going to look for buys, because you know that gold on a higher time frame, we just tapped into this key area on the daily. You're going to see some sort of reaction, new lows printed, but overall, we go to gold. Bias is still bearish on the day trading time frame. You can see what's causing it. So what that tells me is now, as a day trader, someone who's looking at the intraday trend sees fundamentally we are bearish. We have a range towards the downside here. We just tapped into here. What I'm going to do is go in observant mode now. If I didn't catch this buy position here, is I'm going to wait and see, hey, how does price react to here? Is this a price point where we push up into, start kind of retesting it, maybe push down a bit, come back up, retest it a bit, and then continue towards the downside? Or does this price point get taken out and then the market tries to find a higher price point where there is more active selling pressure, which may be somewhere here, it may be some arbitrary price over here, wherever that point may be. So when you see price in the middle of a range, you shouldn't be buying, you shouldn't be selling, you should be in observant mode. You should be in reactive mode, you should be in proactive mode, where you're looking, observing, being a lion, you're on a hunt. It's, hey, this is my price handle, 44.50, clean round number. And what I'm going to do is I'm going to watch and see how price reacts here. If price doesn't come here, price sells off from here, oh well, I'm gonna move on. Maybe I'll check out ES and see what opportunity gets presented here. Maybe I'll look at crude oil and see what's happening there. It's all these markets are impacted by the same catalysts that are ongoing. And all you have to figure out and scope out are the opportunities that get presented to you because of these catalysts. It's not the other way around, right? It's not that price shows you the opportunity. Yes, price gets moved because of the catalyst that's happening, but it's the catalyst that drives the market to certain price points. And then the orders take place. So we have to get that in order. So on gold, it's the same thing, is that we just tapped into an area on the daily time frame as we were looking at the 43.50s. And 50s being, again, a clean round number. Gold loves these round numbers, 25s, 75s, zeros, 50s. The next area I'll be watching for is like this area, 44.50s, and then we have further downside room to go down into here. You can see it's always a transaction between buyers and sellers. Sellers sell off, buyers come in, drive price to a new high. Then you see sellers come drive to a new low, and then again the same thing repeats. So bias is still the same. Nothing really impacts changing of this, unless what ends up happening now is I want to prepare you guys for the opposite side of things too. Okay. And this is just as important. Is yes, you have your scenario planned out that's with the trend. You're moving with the trend, with the fundamental bias, with the technical trend, and they're aligned. It's a nice relationship, very symbiotic. Things move very cleanly. Things make perfect sense when that happens. On the other end of it, I'm going to point something out right here. You see this price action over here, Kevin?
Yep.
43.50s. Gold, when it taps into certain price points, and especially higher time frame price point, it can do aggressive pullbacks. It can do aggressive pullbacks like over here. We tap into here, boom, we saw a straight price push up towards the higher end, right? Or even here, we tapped into this wick down here. You can see price pulled up for about 5 days to create a new lower high. So because we tapped into here, doesn't mean we're going to go and test this area again right away. It could just as well mean that price maybe pushes up a bit higher on the daily time frame, in the higher time frame, before you even see sellers attempt to drive price further down to market's target over here, right? Yep. So that's also the scenario that you should watch out for, is that if sellers don't hold this price point here, 44.50s, and we break higher, there's likelihoods that we could head off into a higher price point back up to here over the next course of the week, just for some relief on gold, because we have been selling off since like 48.90s, from the start, from like end of April, right? And which has been massive swing plays towards the downside.
That's awesome. That's a great setup. And something else to mention, guys, when we're looking for these relief plays, right? You got to remember that that's all they are. They're relief plays to the opposite direction, but they're not trend changes. We're still more bearish on gold, but we're not going to just go straight down, just like markets don't go straight up. There are going to be pullbacks. There's going to be profit taking. So when we are moving higher, again, from a day trader standpoint, sure, you could take those trades. Just don't get greedy thinking, wow, I belong the bottom. Now we're fully reversing to all-time highs. Have your trade plan in order. Know that, okay, if we do break this level, this is my next target.
Yeah, exactly.
Nice.
Exactly.
Yeah.
Sorry. Is delusional optimism common in the markets? Any example of this being used before, please? Absolutely. Man, I'm so happy somebody brought up this question, and this is a fantastic question. Absolutely. So I will actually show you a great example, several examples of this, and we can take this back a few years ago as well. So what I'm going to do is I'm going to show you this example from October 2022. So I'm going to show this example right here. All right, this is perfect. So this is gold. This is gold on the higher time frame, right here, October 2022. This where gold bottomed at $1,600 an ounce. All right, and this takes two concepts of the markets being delusionally optimistic, and when they get that optimism, they run with it. And second, the concept of pricing something in and what that means. And the second concept, what it actually means, the pricing in of an event, an upcoming event, or something that's happening, means that the markets are front running it, or they're actively reflecting what's currently what's in focus into price. So it's being priced in. What ends up happening at this point in time in 2022 October, the Fed was still hiking rates, right? The Fed had started hiking rates right after April 2022, and that was the first rate hike. This was known as one of the most aggressive rate hike cycles in modern finance history, right? So the Federal Reserve hiked rates. They did 3 back-to-back 75 basis point rate hikes during this time, and then the gold market bottomed off here, right? The gold market bottomed off here, but the Fed still wasn't done tightening their policy. They still had a very tight policy to bring inflation down. Remember, inflation reached 9% in 2021, 2022. So they were actively working to bring it down. Yes, the Fed was behind, but they were working towards it. However, even with rates being so high, what ended up happening across markets was markets started pricing in rate cuts. And because of the delusional optimism, you can see how much gold rallied from lows. Even though up here, rates are still above 4%, 3%, rates are still very high. However, gold had just pumped up 4,000 pips. And it's the same play on ES, right? When Fed was tightening over here, ES bottomed out at 2022. Guys, the first rate cut didn't happen until like 2023, like a year into this, right? The first rate cut didn't happen until like here. So the markets had already bottomed out while rates were above 5%. So now think about that. How is that even possible? It's because the markets are delusionally optimistic. When you know that there is a rate cut cycle going to come, because the rate hike cycle is so aggressive, conditions are so tight that you have to be careful. The Fed has to tread lightly. They have to monitor inflation coming down while at the same time making sure that the labor market remains stable. And if it starts to crack, then you know they're going to have to cut rates. So what ends up happening is that the market already knows those rate cuts are going to come eventually. It doesn't matter if they come a year down the line, doesn't matter if they come a year and a half down the line, they're going to come. So after the stock market has just done correcting all the way from 4,700 to 3,500, of course, the markets are going to move in such a delusionally optimistic way because of the massive outflows we've had. We're nearing the end of the rate hike cycle. So now what's next? The markets are going to stop focusing on the rate hike cycle and this controlled outflow that we saw from equities. And now we're going to focus on pricing in the upcoming rate cut cycle. Even though the first rate cut cycle wasn't until a year later, right? That's when Powell started cutting rate, but the markets were already sitting back at the highs when the rate cuts started happening, and then you get that further parabolic push towards the upside with that same sentiment. So it's moments like this where the markets behave in delusionally optimistic ways. Another great point, and I'm gonna have to leave in about 20 minutes, but man, I'm loving this. I love this extra the longer shows that we're doing.
Yeah.
It's great, right? Here's another one. Here's another delusional optimism. This is the most recent example, right? As you know, markets bottomed off 10%. Trump said 2-week ceasefire 3 days after he said it. And then markets went parabolic, even though the war is still going on. Delusional optimism. Here as well. Trump said 90-day pause on tariffs. Markets went parabolic, reached back to all-time highs. It is pure delusional optimism in play over here. Another one that I was trying to, I'm finding here is August 22nd, 2022. So this is better reflected in gold, but I'll show the example here as well. So actually, let's actually go to backtest fundamentals on market, and we will change the time here just so we can really see. And man, I love showing this example, Kevin, because it really shows you how impactful the markets can be and how much they front run certain events because of how impactful certain headlines or events can be, right? So this is the gold chart from June 2025 to January 2026. And if we go into here, you're like, Nalab, how do you know this exact candle? Oh, it's because I pay attention to what happens, guys. It's simple that I understand what happens. I look at the news headlines. I look at what's going on. I look at how that gets reflected into price. I see what can impact, what could flip the bias. I pay attention to it all. That's why I know it all. So when I go to this candle, off the top of my head, like I told you guys, I know everything when it comes to fundamentals, storytelling. Like this is all a story. When I click this candle is very significant in how the markets behave for the next 6 months. And it's this exact 1 hour candle. And not a lot of people can tell you this. 99% of mentors do not know this. You click this one candle, Fed Chair Powell signals possible September rate cut boosting gold demand. This one headline at the Jackson Hole Symposium in 2025, August 22nd, this headline, gold rallied from 3,300 to 4,300 in the next 2 months because of one headline, because the market started pricing in the next rate cut cycle. And this one headline started the sentiment for it. And then came the rate cut in September, then came the rate cut in November, then came the rate cut in December. So you can see how this one moment caused the markets to go parabolic for the next 3 months. And this is fundamentals being priced in, being reflected with sentiment lasting for months at a time and markets behaving delusionally before the event actually even happens.
Yep. Awesome. Great example. I know you love that example. I've seen you pull it up before.
Man, that to me, that is such a clear example to show people how it, like, you need to pay attention to fundamentals. Is that these events, you can see one single candle paved the way for the next 3 months of sentiment. Now, if you just knew that, you could have been taking gold buys on every single pullback and holding it because you understand this is a massive change in sentiment. We just went from not knowing when the next rate cut cycle would start to Powell signaling, hey, it's September, guys. We're starting in September. Now think about that. It's if you knew that this was happening, every pullback on gold, every pullback on S&P, you would be buying. You wouldn't be looking at sells. You would not be sitting out. You'd be in front of your chart, dialed in, understanding, watching a news feed, understanding, hey, FOMC, September FOMC is 3 weeks away. Powell just signaled rate cuts. I'm going to start front running the buys because I know markets are going to start pricing that in, because markets are greedy, because they're delusionally optimistic, because they love to front run things before they even happen. That's what it's about, man. It's about being able to understand all of this, piece it together, and forecast. Hey, then maybe 3 months down the line, gold might actually be at this price level because of this thesis that I've built, because I understand everything that goes on. And that's where the beauty is. That's how you can call yourself a real day trader, is when you come to the charts and go to any moment in your market and you can explain to someone else, this is what caused this price movement. Not because there's an inverse value, fair value gap, or whatever that is, but it's because there was a fundamental catalyst that held lasting impact for 3 months, and that's why I took buys for 3 months and I profited so much.
That's 100% spot on, and you're spot on too in that you have to understand what you're looking at. You have to understand what's moving markets. You can't just be guessing. You don't really understand trading if you don't really understand what's moving markets.
Absolutely, and it's as simple as, hey man, if you don't understand the financial side of it, of the financial markets, like you're just a monkey in a zoo. You're just making sounds and clicking buttons. That's it.
You're the 90% that's not taking advantage of something that's going to give you some insight, give you that edge, right? Every trader comes into the market looking for an edge. Fundamentals is your edge, right? You add that on top of some type of trading strategy that you could consistently and routinely come back to day after day. The goal being consistent traders to make consistent profits, right? You can't be a consistent trader if you don't have a consistent routine.
Yeah, absolutely. If you don't have a consistent routine, and that comes from like not only like with your health, but also like a routine where you sit down, do your research, document it, create these scenarios, write down these scenarios, and then execute on it. That's your routine as a trader, right? It's like, hey, I come down to it, Kevin, and sometimes it's easy as, hey, I'm gonna look for sales.
Yeah. I'm just gonna
up here. I'm telling you, this will save a lot of you headache. Draw out a price area where you're looking for sells or where you're looking for buys, and write this down. Now, don't do anything until price comes there and gives you a signal to act. Otherwise, you're gonna burn yourself. That's it. Look for sells. Let me duplicate this, copy and paste. I'm gonna look for sells up here too. That's it, man. That's all I'm looking for. So it's lovely things like this that can really last 1 hour candle. Absolutely, we can click this. Gold spikes as USPC comes in cooler than expected, weakening the dollar. Core PC month over month 0.2% versus 0.3. Forecast eases near-term Fed rate hike fears. Remember, markets were pricing in a more hawkish Fed, and that's why we've seen a lot more dollar strength recently come in, more pressure on gold as well, pricing in a more hawkish Fed because of the inflationary fears that come from the war, from oil spiking fears, right? So market was pricing that in. We got lower PCE come in, and then that added, that caused dollar weakness, plus GDP misses at 1.6 versus 2.0 consensus, right? So that also brings a bit more dollar weakness. You can see the lower time frame price action right there. And then also keep in mind that the day trading bias is bearish, right? Mm-hmm. It's bearish. So gold spiking up to here can be an area where sellers actually jump back in. So if you see gold jump into here and then sellers start to fade this move, that's an area that where, okay, sells look likely here because you're trying to now short and you have a much higher risk reward over here, right? Imagine you took this sort of short. I'm not saying do it, but I'm saying, let's say you took this, okay? That is much better than trying to short over here. Because what you short over here is, okay, your target is this to the downside because you don't know where it could go further, right? But your stop loss would have to be up here. That doesn't make sense because now you see market psychology wise, why would market participants continue to jump into shorts at lows, at weekly lows, when the market's been selling off since here?
Right.
Why would that doesn't make sense? Why would I want to sell at the very low price when just hours ago I had an opportunity to sell here? So that's what you have to think about, is that you have to keep in mind that wait for certain areas. You have to wait for the fundamental bias and the technical bias to align. I'm not going to be looking for shorts when price is at lows. That technically doesn't make sense. That's something you learn the first day you become a trader, is sell high, buy low. And it's the same thing here. You're not going to sell into this price point. Instead, you're going to look for the opposite. So you got to train your mind. Every time your Google Gaga brain tells you to look for buys on a break of a high, like here on ES, let's say people's Google Gaga brain tells them, let's look for some buys, guys. Just keep in mind you're buying into a new all-time high.
Right.
Who are you going to sell? Who is going to want to buy more contracts into these highs, right? The logical thing is the market's going to dump. And the market's going to dump because buyers are going to take profits, sellers are going to jump in, that transaction is going to happen, markets are going to be driven to a lower price point where then they're going to find fair value, people are going to buy into it, and there's going to be more buy orders that are going to cause that price movement to continue. So it's that same thing we talked about, was that just because ES broke this low where I had my buy entry doesn't mean that it's now all of a sudden bearish and we have to head out into here. And that's not what it did at all. We jumped back, we snapped back above 50, 75, 25, came back down to retest it, create a higher low. If you look into the lower time frames, you can see that price is continuously building that higher low. We mapped out a possible scenario at the, hey, if ES continues, taps into this price level, maybe we'll look for some intraday buys because the same area has held throughout the entire week. And just because we broke it slightly doesn't mean it's invalidated. The bias is still holding. We are still bullish. We are still focused on the higher time frame target levels over here, the intraday target levels at 7,600s because of these factors, right? So this is what it's all about. Like, you can go to any of these markets, figure out what is driving them, where you should be looking to target, what could influence it on the opposite end that could pull it down to a better buy area. But you have to keep in mind, all of this has to be aligned. If you're taking trades that are against the fundamental bias, you're going against what the market is doing, right? And somebody said this whole year, this is what I've been trying to focus on, mastering pullback trade. Absolutely, man. I can't tell you how many losses I stopped taking once I stopped the breakout trades. Like, I have just gone, my bread and butter has just become pullback trades, where I can wait for a pullback, like pullbacks on gold to look for sells, like this one. Let's say you see a low created, you wait for gold to pull back, look for sells, or similar to the idea that we're mapping out here, right? Where, okay, you see gold in the middle of this, we have a zone here. If it comes here, now on an intraday area, this ends up looking like a lower high where I can target towards the downside. Amazing pullback. Gives me a much safer, I'm more confident when I take this position. I don't have to monitor it because I have my stop loss set, right? Okay, maybe gold pushes a bit higher. Perfect. The bias is still intact. All I'm going to do is just retry. Sometimes it takes more than once to get your positioning right. And I go through that often, actually. Sometimes it'll take me once or twice, or at worst, like 3 times to get the correct positioning, right? And maybe I'll be managing the position, but that's just how I trade. I'll be able to manage it. If I see, okay, if it pushes a bit higher, I take a stop loss, it comes back down, snaps in, it's looking good, structure looks good, I'll re-enter because I believe in that positioning. And it's about having that conviction, right? Imagine looking for gold sells here after market open, and then for about an entire day, you're at break even, you're in drawdown, and then the move actually happens. So you have to have that conviction. You have to know that, hey, gold is still bearish on the intraday. I'm not going to take this gap up as a sign that, oh, we're going to start pushing up now. And that's what people took it as. People took this gap up on gold with the de-escalation headlines over the weekend as, hey, gold's going to continue higher. Gold didn't push higher at all. Gold stopped right where it gapped up, and then that was a weekly high. And then boom, we sold off like 2,000 pips since then. So this is what I love, man. It's when we can come together, explain how the markets are moving, what's causing them to move, generate these, come up with trade ideas that are all based off of probabilities, and then act on it, and then take those trades. Like the move that we called out, Kevin, we called out earlier this week on Tuesday. ES was up here in that point. Oh, I don't want to trade. I just want to, go here.
Oh, guys, New York session just opened, guys. New York session is open. Keep an eye out for extra volatility to start to kick in on the ES and the NASDAQ.
Yeah, great point.
I'd love to see ES sweep some pre-market lows that we were at. near 75.06 before trying to make its way higher. Again,
Yeah,
giving
I
us
agree. Like that price one would be great to tap into, like this
Yep.
here area. Even like I think buyers would really defend this 74.80s area we've been talking about for the week.
Yep.
Diving into here, but it's gonna take a bit to get down there. Like it's gonna take some sort of catalyst. However, I like your game plan of reacting to these lows over here. I would like to see where I have the zone drawn out, or even just like another push into this area. And if we see lower time frame price action, if you're a scalper, that would be a good area to potentially get into some buys to target these range highs. And of course, take it as it comes, right? Like you can clearly see like in if I go down here, there's some price sensitivity over here you want to watch out for. There's this, of course, at the highs over here. But these are all like reactionary points you want to watch out for if you're in these buy positions to see how market reacts here. Maybe throughout the session we push into here and then we do market does what Kevin was talking about and then we continue on, which is fine as well. And that's exactly what happened when we were mapping out this trade idea. We were mentioning this while me and Kevin were on market in the morning, where hey guys, if we come back, if we were to like if we come sweep these lows and react to them, this would be a good area for buyers to come in because we're holding that structure. And that's exactly what happened, right? Like throughout the session, we had at 9:30 after NYSE open, price come down, react to these lows, buyers jump in, and then we pushed up. And then the same thing as I was mentioning, that we come right back down to that zone again before the market pushes up again, and that's fine. But what we mean is that look at that, exactly what Kevin's mentioning. Broke below those lows, snap back above. You get your buyer entries, you get the double bottom here, you get buyers continuing to jump in. You get your double bottom, higher low printed, higher low gets printed, and then over the course of the next few hours and few sessions overnight, you can see we go right into the higher time frame highs over here at 57.70s. And that's because the positioning was set in New York session, and then the later sessions just drove price right back to those highs over here. And that's what being positioned in the market's about, is although I had my entry over here, my stop loss was below here. So I was able to withstand this drawdown, have that conviction, and not be under stress when I saw a leg down like this. Because as Kevin mentioned, that's possible, is that if we push into here, break a bit below here, buyers then jump in, market snaps above here, and boom, we make our way up to here. Or we just maybe push a bit lower to get better buy price. All of these are just scenarios that are built off of the fundamental bias because we understand that's what drives markets. Now, since that's what drives markets, then you can come to the charts and be like, hey, this is a buy entry for me. However, I'm not going to look for buys within the middle of this range because previously that it just causes a bit more consolidated, price can pull back. And so it's all about being positioned correctly, aligned with the bias, not looking for sells just because you're in the middle of it and you see this one bearish candle. It's understanding, hey, I'm going to be positioned with the fundamental bias because that increases my probability of success in the market. Is that if I'm positioned against it, I'm now almost shooting myself in the foot because that's not what the majority are doing.
Yep, absolutely. And it's also important to recognize like the current market conditions, right? If we've been trending really hard, we've been making new all-time high yesterday. We made a new all-time high the day prior, right? It's a lot easier to try to catch smaller pullbacks and breakouts. But what we've been seeing a lot lately, I'm going to share my screen for a moment. Sure. Like ES, even NASDAQ, we've been seeing since this is our Friday night close, Sunday we gapped up. Here's our gap low. We've been sweeping the low and then reversing, coming to that next new low and then reversing, coming to that next low and then reversing. So markets are really fading the people out who are trying to short these markets, but they're also giving buyers a run for their money at this point. Yeah. So knowing the fundamentals are still more bullish, we're looking for this pattern of sweep a low and reverse higher, sweep a low, reverse higher. We're looking for that pattern to play out today. And that's exactly why I'm looking for longs to target back to those highs.
Yeah. I agree. I absolutely agree with what you just said. You have to look at how price is behaving in recent times. And that's, let's say, this week, previous weeks, right? Because in certain times, it'll just move the same as it does in the past 3 weeks. And then you can just take advantage. Kevin's saying, break below the previous lows, then push snap back into the range and buyers jump back in. So that's the exact setup that we know has been playing out. As you know, for like the past 2 years, gold runs beautifully during Asian hours. And if you've been in the markets for more than 5 years, you realize that's not always been the case, where gold used to move 20 pips, 30 pips during an Asian session, and that's $3, right? That's not a lot of price movement. And now gold moves hundreds of dollars during an Asian session. So again, also just to bring back some attention on gold, you can see gold is a bit, is pushing down a bit. And this could be the area where, okay, maybe we just push down, but I would have really liked to see this price point, and I'm still going to watch out for it. So I'm not in any active positions over here. But if gold was to push into this area during the session, I would be observing and looking for sells, right? So here we can see that, okay, there may be some lower highs printed here. Imagine now that maybe we don't push back into this area and we continue down. Then you'd want to see some sort of like lower time frame price action that mimics a change in structure. So by that I mean like your lower highs being formed, your lower lows being formed, and then that shows you, okay, maybe lower time frame is now headed down and fading out and canceling out this move to the left, right? Just like how it did on ES yesterday, where let's just go back here, cancel this replay. Just like how it did here, where you had this push into all-time highs, and then slowly lower high, break below, and then you can clearly see in a technical structure, high printed, lower high, seller jumping in, break below here, sellers jumped in, drove price down, corrected, and canceled out this entire move. So it's similar fashion, is that could happen on gold as well, on the other end of the scenario, where you could then take sells going down into here, like from one of these lower highs. Or what I would really love to do is look for an entry up here. To me, that's a favorable price point that I want to look into. And remember, I mentioned before is that I've personally gone really good at, hey, if market's not at my price level, I don't want to just jump in from the second grade level, because
Right.
for me, I want to look for the A plus setups. I don't want to settle for a B. Like you, that's the way I like to think about it. Is if you're settling for a trade that's more B class, C class, you're kind of just settling then, right? Like you're giving up what you wanted. I wanted an A plus setup. Why would I, if I want a McLaren, why would I settle for a Honda? You know what I mean?
Yeah, no,
So it's
never.
the same thing. Apply that same thing to trading. And if you want a beautiful wife who's going to take care of you, why would you settle for Shrek? Like, you wouldn't. Like, you wouldn't settle for an ogre. You would be like, hey, yeah, I'm going to settle for what I want. And it's the same thing with trade. You plan out a trade. This is what I want. And you don't take something that's mediocre or something less. So now when we look at gold, now we start to pay attention to, hey, what's going to happen? Are we going to formulate that lower high like we did here and continue towards the downside, cancel out that move? Or are we gearing up to now see that push into this price zone? And then we'll see how markets react to it and what ends up happening here. And that's what I'm waiting for, is that if we start to get a push into here, I'm going to start rubbing my hands together and be like, hey, let me observe this. Let me see what's going on. So that's what I'll keep the screen on here. We'll quickly look at ES and what's happening here. Kevin, do you have anything you want to add?
No, listen, we're getting the price action that we were looking for from the pre-market. We are starting to pull back from highs, sort of lower highs like we've been seeing, but still staying within a bit of a confined range. I did just take a couple small scalps on NASDAQ to the downside off of these highs, knowing that going over what we're going over, we have been failing to break and hold. All the breakouts are failing. So, it's sort of a joke, right? If we're not going up, we're going down. Markets are either going. It's funny. I trade with the community, and there's somebody in there once, and he was like, "Well, we're either going up or we're going down."
Mm-hmm.
I'm like, "Gee, thanks. That's
Thanks,
very
man. Yeah, a
insightful."
lot of help, man.
Yeah, very insightful. But it's funny, but it's true, right? If markets are failing to move higher, there's really only one other direction we can go. Now, of course, markets could stay range bound, but that's when we as traders have to be able to recognize that range.
Yeah, I agree.
But would love to see a better buying opportunity somewhere today. We've also noticed very often in the markets during New York session, at least on things like the ES and NASDAQ, is they open, they open more bearish, then they get choppy until about noon or 1 o'clock, and then what do? We get our afternoon reversal right back to highs. So let it open, let it be bearish off the open. Let's see if we could sweep some lows and find a better pullback opportunity to go long. And we can use market, say, okay, where's our market? NASDAQ, pullback level 29,650. And we could take a look at NASDAQ here, 29,650 is right. Look at that, 29,650, is that it? Wait, no, 29,650. Little deep on that on NASDAQ, right? 29,650. Little deep on NQ, but it's possible, right? We see that. What have we been doing? We have been trying to get lower. 650 is right down here. That is right below that low that I was looking for us to sweep. So can we get lower? This lines up with our market pullback and everything else in between. If you're a scalper, you could possibly try to scalp it lower. It's just important to recognize overall fundamentals are still bullish. So if you are taking it short and it moves in your favor, don't be afraid to lock in profits. Right? Never hesitate to lock in profits, especially if it's a bit of a counter trend trade.
Absolutely. Yeah. That's the key actually, is that you should be more vigilant to lock in profits. Like you should be more alert when it's a counter trend trade, right?
Yep.
So that's a great point that you just made, Kevin.
75. What's up, Platts? Homie? 75.20 on ES looks like a good buy area. So 75.20 does look okay for now. What I would be seeing on the ES here with 75.20 is that we still created these lower lows, did not create a higher high yet. We did sweep this high right here during our during overnight session, and now we're pulling back. So this sort of makes me wonder, do we want to now create some higher lows and start to trend on higher? So yeah, 75.20 is a great spot. Would definitely keep an eye on it. I'm definitely a bit more interested in seeing if markets want to repeat themselves, as they do tend to do, which is a sweep of the low and then a reversal. So I do want to see if we can make our way about just 20 points lower before lining up for a possible 40-point move to the upside.
Yeah, and even though I was looking at that 25 area I was talking about before, I'd love to get that sweep, but this area again, like we've just held higher lows the entire session and pre-market session. So even if we reject off of here, as I was saying, like it makes plenty of sense for us to get like here. Let me see if I can bring back my.
Absolutely, yeah, that's 75.25, right? That was from Tuesday.
Yeah, 75.25, same area, same continuation of that illustration that I drew on earlier in the session, where it's like, hey, if we start moving again, like in this format, this could be this 20s area is good. Otherwise, we'd want to get some sort of sweep into this downside area, and then get sort of that bounce back up and snap back above entry into this price handle. So that's what I'm keeping my eyes on ES, would be here, these two scenarios for the current session. If somehow we end up dumping into 74.80s, this is my next like high conviction area for an intraday bounce, where you take this bounce and then as it pushes up, you like scale out. Of course, leave a runner because we're optimistic. We know highs are going to be hit. We just got to wait for there to be that much buying volume in the market for it to actually happen. In terms of gold again is still in this area. So we got to pay attention to how this develops. As I was mentioning, how it previously developed over here, you got those lower highs formed and then that move got corrected. But that was from a previous like area of interest at these highs, right? Gold, the area we were watching for was 44.50. So that resistance, that intraday zone to the left over here was a nice sell point. But if we start seeing sellers continuously jump back in from these lower highs in the lower time frame, then we could see this move get corrected. But that would be more for your scalping day trading ideas. For your day trading ideas, I would really love to see this area play out. And that's not to say that just because we have a tap day, we can't just sell off. We 100% can. It's just about where you want to position yourself and how we like to do things. We show you where the intraday setups can take place or the swing setups can take place, but also what you can do to scalp these sort of movements, right? Like where we drew this out at the start of the show that, hey, if we got some sort of pullback that mimicked how market had been moving pre-market session, higher low printed, we snapped back above 75.25. you get created a new high past these ones, come retest, you may just get buying come and take place here. And currently that's what's happening. So we'll keep an eye out because markets just open, right? They just literally they opened like 15 minutes ago. You have an entire session, you have an entire day ahead of you for price actions to develop. Even yesterday, we didn't get buying come in until like 1 p.m. Eastern, right? And then you saw off the lows after breaking below these lows, buyers jumped right back into the market at 1 p.m. Eastern. So just because we aren't moving that direction right now, it doesn't mean that this sort of scenario can't play out that Kevin was mentioning. It most definitely can play out, and it has a high probability of playing out. But at the same time, there's also probability where we just continue from here as we dipped below here. Maybe buyers jumped in. We have enough buyers in the market to continue from this handle. But that's what just being patient, understanding, hey, we can potentially push down. So let me just observe. Let me just see how price is going to react to both of these levels. And if it makes sense, that's when I'm going to execute. I'm not going to execute by just hoping that market continues from here. And then what ends up happening is, hey, I get stopped out. And then now I don't want to take a position, right? So it's about waiting. It's about observing. It's about, hey, I have these scenarios mapped out on gold. I kind of don't want to take an entry here because gold isn't at my sell price. So maybe I'll just stay this out and I'll just watch this. And that's just as good because it prevents you from a loss. Because let's say you take an entry here and gold actually pushes higher to the price point you were waiting for. Now you just feel like a monkey because you went against your rules, you went against your plan. And it's not a good feeling, right? So when things align, when fundamentals and technicals are aligned, that cohesive relationship plays out beautifully and it increases the conviction rate of your trade. It increases the success rate of your trade. And overall, you'll understand and you'll be at peace because you know everything that's going on in the markets.
That's it. Set yourself up for the best success possible, for the best outcome. Don't hide information from yourself. Give yourself that opportunity to understand markets, understand the financial markets, and use MRKT to understand that for you, right? Again, we're no longer in a day and age where it's like, oh, if you want to know a company's, if you want to know what CPI is at or where it has been, or what it even means, or what this headline means, or when a new headline comes out, you have to stay on a search engine, or you have to have the TV on all the time. We're in 2026. We have a platform that does all of that for you. So definitely take advantage of it. Right now, we are seeing VIX at a pretty crucial level. I would like to almost see VIX start to reverse back higher from here. Now, a higher VIX usually does lead to a bit of a lower ES and NQ. And again, overall, we are seeing more bearish action off the New York session open, but that is what we've been seeing for the past few days, right? We've been seeing, okay, markets open, we sell off, we chop around, and then we slowly make our way back higher. Just like Nalab said, markets aren't open for 30 minutes, aren't open for an hour. They're open for 6.5 hours for the New York session. It could chop an hour and then continue. Do not force things. If we're not at your predetermined zone, we're not at your predetermined level, stay out of markets. You're muted. Oh, my bad.
Sorry. I was saying, don't force things. Let things come to you. Think about every moment in your life where you've tried to really force something. It hasn't happened. It doesn't happen. That's not how things happen. You have to be natural. You have to flow with it. It's just the way the world works, the universe works, is when you're really trying to force things to happen, you're kind of often working in resistance towards it. So let things come to you. Let the market come to the price point you want. Don't settle for shittier setups, right? Like if Kevin is waiting for these buys here, maybe he's not going to look to take these ones or take it when price is pushing into here because he's like, hey, I want the best setup. And I planned that was the best one. Today might just be a no trade day for me. You know what I mean? So that's the thinking. That takes traders from short-term success to having more long-term success because it's not about how much did you make this week. It's about how much did you make over the past 5 years and how much of that did actually hit your bank account. Yeah, that's what it's about. It's like, okay, cool. You made $2,000 today, but did you lose that over the next week or did you actually take it out, pay some bills with it? That's the key here, dude. People get caught up in taking screenshots and then like you see their bank account has less than $3,000 in it. It's how are you a trader? if that's what's happening, right? You're gambling. So take your profits. If you're in a counter trend trade, wait for logical areas that align with fundamental biases, execute trades exactly how we were mentioning. Look at gold right now. Gold is right now pushing up from these lows, but I'm telling you, there's definitely people who got enticed into selling down here because they're like, hey, this is a lower high. And that's why we mentioned that if this is what you're waiting for, then wait for it. Don't just change your entire thesis on what your setup should be for that session because price is not coming to it. You
Yep.
want to be aligned. You want to be waiting for what happens. So in this case, you can see right now price is reacting to 57.25. If we continue holding this, then this high is going to be met. Once this high gets met, now we look left. Where can we go next? We will go into this area, right? In this short-term area, which is 75, 52s, 50s. What can come after that is this 60 price handle in the lower time frame. Once that gets taken out, boom, we're at 70. And little by little, you paint this scenario, you watch it as it comes, and then you execute, you manage your positions as you reach these price points, you take profit, take partials, and next thing you know, you're up here. And now, let's say market breaks out, you have a 10% runner that's holding, and you're letting that run because you know markets are optimistic, swing trading, day trading bias. This is what's driving it. Headlines are all aligning with it. You know what can possibly change that scenario, and that's not happening at the moment. So you just let it run.
Yep.
And that's the story here. Is that it's beautiful. It's two things. It's these things working together. Two concepts working hand in hand. When we come to the markets, all we pay attention to is the technicals. But then you realize there's a whole new other side of it, the financial side of it, the macro, the geopolitics, the headlines. All of these things actually paint what the market does on a day-to-day basis. And if that's what's being ignored, or if you feel intimidated by that, you shouldn't. It's nothing scary. You shouldn't be scared by headlines. It should entice you to want to learn about it. Because
Yeah.
if you don't come to the charts every day and aren't excited to solve this puzzle that's in front of you, to decode where how money could flow into it, flow out of it. If you don't feel excited, you don't feel like Sherlock Holmes, then you're in the wrong profession. The entire point is that this is a puzzle, and it's your job to piece things together, to solve the puzzle, to find the corner pieces, start off with that, create the border, then fill in the inside. That's how you work in the financial markets. You look at the story, the broader picture, understand what sentiment is, how it's impacting positioning this week, how it can impact positioning this session, and then execute. That's the entire game plan. That's how you level up. That's how you make it in trading. That's how you become consistent. If you're just chasing and you're running sporadically and your brain is running 200 miles an hour, and you're not calm when you're in front of the chart, you're gonna fail. You're gonna take losses. You're gonna hurt yourself. You're gonna hurt your bank account. Your family member is gonna feel the pain. You're gonna be mad. You want to be happy in life. You want to be calm. You want to be peaceful. So just understand everything about what you're working on. And I've made this example so many times, is that imagine you're a neurosurgeon and you don't understand what the left half of the brain does. How can you call yourself a neurosurgeon? It's the same with financial markets. If you're a day trader and you're not understanding the financial side of the markets, you're not a day trader. You're just someone who's a child running around with a few $1,000s gambling in the markets.
Yeah. Yeah. It's true. Very true. You have to have an edge. You have to understand. You cannot just be blind. Candles are the reaction to fundamentals. Got to remember that.
Yeah, absolutely. So gold still pushing off into there. This might just be this one of those days where we just see price set up later into the session and not,
Yeah.
and that's fine because I see a lot of people come to the charts and they have their set window of, hey, I'm going to look for a trade from market open 9:30 Eastern to 11:30 Eastern. If I don't find something, my technical setup, I'll move away. And that's fine if that's the sort of trader you are, right?
Right.
But you limit yourself to that window. A lot of times price may not set up till later in the session, like in this case, 1 p.m. Eastern. In this case, 3 p.m. Eastern is when price started rallying, right? So you
Yep.
limit yourself. What I found works best for me, it's also the least stressful, is more day trading positioning, where regardless of whatever time it is in the market, I'll look for a position if the market is at my price point. So in that case, And here, even though market was at my price point at 1 p.m., 2 p.m., I was in buys from these lows because that's the price point I was looking for. I was in the position from here, and then I added to it over here because it was still respecting my trade idea. And then that plays out, right? Yesterday, I was in a position from 10 a.m. when we tapped these lows, 10 a.m. Eastern. And then during 2 p.m. Eastern, 1 p.m. Eastern, I was still in that position because it still reflected in my price, reflected my trade idea. However, it hit stop loss, but that's just the probability of it. What I'm trying to say is that you don't want to limit yourself. Positioning can take place any time of the day. It could happen at 7 p.m. You see markets rally. It could happen at 10 a.m., 2 p.m. The market doesn't move on your timing. So if you want to trade 9:30 to 11:30, by all means do it. But what I want to be aligned with is I want to be aligned with the big boys in the market. I want to be aligned with the people and the positioning that drives moves like this, that truly drives moves on a higher scale, on a much larger scale, from lows like here to up here. That's the sort of positioning we need to be able to forecast and be like, hey, markets are correcting 10%. And Kevin was mentioning this. You can go to the market in the mornings here. Kevin mentioned the 10% move so many times where he's like, hey, guys, we're approaching the 10%. This is a key area to be watching out for. And guess what? The market's bottomed out here, right at where Kevin was mentioning for weeks while we were making our way down. And then Trump comes out days after Kevin calls the bottom, and Trump says, hey, 2-week ceasefire. So who really drives the market? Is it Kevin in market in the morning, or is it Trump 3 days later? You know what I mean? Piece things together, guys. We're dropping guns here. So that's the type of positioning I want to be in. I don't want to be catching just quick bounces from here to here for 10 points. That's not what interests me. What interests me and brings me fulfillment is understanding fundamentals and being able to forecast, let's say, buys from down here May 19th all the way back to these highs, and understanding what's actually happening and driving the change from this intraday outflow positioning, this pullback where you had lower highs, lower lows printed, to now buyers coming back in. And that's what's truly exciting, right? It's figuring out that puzzle and executing off of all this information that you have.
That's it. Just take the pieces you have. Don't make them up in your head. Don't think, oh, well, if we break out here, if this, no. And, right, it's the whole and theory. Do we have multiple confluences? Do you have multiple reasons supporting your trade setup? If not, you don't have a trade setup.
Yeah, it's simple as that. Like we just talked so many gems in this.
Yeah,
it's been a crazy good session. The buys from here are playing out right now. We're up like 8 points on these, but again, we got a whole session ahead of us. So if you're in this type of positioning, you have to keep in mind that, hey, maybe even if over the course of the next few hours, if ES can't break past 75.40s, 75.50s, then maybe we pull back into here,
right,
for buyers to retry this area to see if buyers hold this area, and then we push up. So you got to keep that part in mind too, is that when you take a trade like this over here, that you have more downside risk on your hand over here, where there is a probability where a price goes into here, because that's what it's done over the past 2 days, where you see that initial push, 10 a.m., sellers jump back in, and then over the course of the next few hours, price sets up for the actual intraday play. So keep that in mind. That's always good to map out the other end of your scenario that can invalidate your current positioning if you're in buys like here, right? And then also you have to pay attention to the upcoming setup. So for us, it'd be watching gold and seeing how gold reacts to this intraday price point. Because gold is bearish, my first area of interest would be 44.50s, as I was mentioning. And then market also has labeled off a 44.80s price point, which is near the 75 handle that gold really likes to respect. Some people, I also use fibs as confluence on the technical side, because fib levels can also align with a lot of the levels we're looking at. So you can see the 38 retracement is right here. 50 is right at the 73, which is like 75 area, markets 80 area, that price zone, right? Because it's a zone. At the end of the day, these are all price zones. So you want to pay attention and make sure you're aligned with that. So yeah, that's why we waited for gold as well, because I wasn't convinced that this was a selling point, because when I'm thinking about it on an aspect of, hey, if I'm an institution, do I want to sell gold at 44.25, or would I rather get an entry at 44.55? I'd rather get it on 55, right? That just makes more sense. And that doesn't mean it can't sell off. I'm trying to paint the picture for you that you have to think about it in terms of what's a better price.
That's it.
Right? You're not going to buy Nvidia at $250 when a year ago you could have bought it at 80.
That's
right?
crazy.
It doesn't make sense. So that's what it's about. It's about waiting for price. And there we go. We were mentioning at the start over here, you don't want to be buying into this high. You want to wait for that scenario to play out where you get that retracement, you get that higher low formed in the lower time frame, and that exactly happened at the 75.25 price point that we were talking about. Now that's up about 13 points. So as we approach this, if you're in that position, you want to probably secure some profits, right? And then see if it extends higher into 50s, secure some profits there, and just really observe how this position plays out, because the bias, we're moving in line with it. Excuse me. We're moving in line with the bias. So if it starts to break above these price points, then your next area of target should be the all-time highs plus higher if we break above it. So that's how you take what you see on the chart market from just starting off at a simple day trading bias, just from there, and you work through the workflow. And the best way, if you're new here, you click take the tour and we'll walk you through it. So this is your bias for ES, right? Fundamental technical bias for day trading and swing trading. This is your chart where everything gets reflected. So I'm going to exit here, but if you scroll in, you can see where these events happen, right? So you take the tour, you look at the charts, fundamentals get translated directly onto here. Here's your levels, your pullback area. You can click any candle to see what moved it. You can see what's supporting the bias right now, what's the top bias, the headlines that get stacked under it. You can see what could flip it bearish. Here's your events that are coming up for the day. Here's your news feed. Here's what's recently impacted it. Like all of this, guys, used to be so hard to understand and make sense of. But now any trader, regardless of your skill level, can come to market, open up the chart, open up any asset, any market that you trade, and understand the picture behind it, understand where these events happen, what it means. When you click a candle and it loads up, like what does that actually mean? What happened here? Iran strike headlines versus just sharper risk off gold liquidation. Like that's what it means. Gold has had bid on Middle East escalation before the hour. So you have to take all of this into context and then execute your trades off of it. Gold didn't sell off last night randomly. Gold sold off because of a key catalyst that was holding weight from the previous session, and then it got further amplified, right? Gold didn't pump up from lows here because randomly, it was because of inflation data and bad dollar day. So you can see here, and markets pricing in a less hawkish Fed. So now gold got that relief, pulled up near our price point, didn't push into it yet, but you can see structure here is definitely telling us a story. It's telling us, hey, maybe sellers did hold this price point here. Now, if you get breaks below into here, maybe we'll start seeing price action like this that can then cancel out this play, right? But if we don't get this sort of price action and then this level holds, the other opposite end can play out where our intraday positioning may get tapped and we may want to enter there. So lots of gems in this webinar, in this market in the morning. And I'm excited to be doing this for 2 hours a day on every single day.
Bro, hell yeah, man. Hell yeah. Guys, make sure you run the like button up. Make sure you like it, share, subscribe if you're on YouTube, repost it if you're here watching on X. Share the information, right? We're not gatekeeping here. We're trying to spread the information to you guys so you're not in the dust, right? We want to give you that institutional knowledge of fundamentals on a retail scale so you can understand it.
Absolutely. So we're just scanning some headlines, seeing if we had anything come in. We had home sales data come in.
Yeah. Pending home. Oh, yeah. What is it? New home sales came out at 10 o'clock. We were covering that in the pre-market. Probably, I would assume higher than expected, lower than expected. Look at that. People are starting to give up, finally.
Yeah. Excuse me.
There was a few headlines coming out over the past month or two where Google searches are starting to trend of people looking up things like, help me sell my home, help me with my mortgage, right? Things that haven't been searched so heavily since the crash of '08. So things are starting to turn. We got to remember too, a lot of people have this mindset that like, oh, well, the dot-com bubble, it's going to crash the economy. There's going to be an economic reset. I can almost guarantee that at some point in the next year or two, there's going to be a big reset. There's going to be a lot of pain in the economy to bring us back to a reasonable area. But is it going to be just AI? No, it's going to be multiple sectors, possibly higher energy costs, making things more expensive. Housing market crash. We've seen that before. There are more pieces to the market in the economy than just AI. And I feel like with NVIDIA's big blow up, Micron just hit $1 trillion in market cap yesterday off a 19% gain in a single day after Trump made an announcement on it on Friday. So sure, we're in a bit of an AI bubble in a sense of the revenue coming into it, but is it sustainable? No. Is it going to just burst and fall to zero in a day? No. But things are starting to line up, dominoes are starting to fall, and we're going to see that pressure. And the first thing that usually does start to show is that higher inflation. So the longer oil stays higher, the higher our inflation, CPI, stays higher.
Yeah, agree.
What's cool too with market, guys, is we have our economy tab over here. I mentioned before, you don't need to be Googling what was inflation in April, what was inflation in March, what was No, you come to the market tab and it gives you charts of each report. So we see that just in February, CPI was at 2.4%, extremely close to the Fed's target of 2%. Great, this looks great for rate cuts. Now, 3.8%, or almost double the Fed's target of 2%. This is a massive red flag. We're seeing PPI, which is a sort of a leading index into how CPI will come through, is also increasing to the upside. It was down at 3%, 3.1% 4 months ago. Now it's almost double that at 6%. Higher inflation, higher oil costs equals higher import costs. When those big companies, big tech, even car companies that have to spend more money on those imports and exports, they're going to pass those extra prices along to you, the consumer, by increasing their prices.
Yeah.
So we're definitely in for some headwind. And we could even keep an eye on unemployment rate. Is sitting at 4.3%. We see just a few months ago, it's sort of been chilling around 4.3%. Unemployment tends to be the last thing to crack, which signals the economic sort of hitting a wall, right?
Yeah, absolutely.
So we'll keep an eye. I would say unemployment above 4.6%, 4.7%, that's when the red flags will really start shooting off in the economy and in all the news headlines.
Yeah. Kevin, I got to head out. I have a meeting in a few minutes, but we had an amazing session. I can't wait to be back on Tuesday with a 2-hour session from 8:20 to 10:30. We're going to bang it out. ES is playing out nicely from 75.25 trade idea that we gave out from right there. So that has played out perfectly. Again, we pointed out why this would happen. We mapped out other scenarios, and then we executed on the highest probability one. Same with gold right now. We guided you through this current price action, through the data release on how gold is currently behaving. And we told you, hey, it might be better to wait for how to see how price reacts to the 44.50s, or if you're trading futures, 44.80s area, 4,500, basically that entire area. So that's what you should wait out for. And that's exactly what happened on gold. Like, look at gold's 1 minute price action right now. Gold is now pushing into that area. And that's what I was mentioning. Hey, if we don't break that low in the 1 minute, that's not sellers jumping in. It's just buyers going to push price into this area. And now you get to observe. Now you get to watch and see how gold reacts as we head up into here. And now if you see, Kevin, do you mind if we put my screen on focus? Yeah. Now, if I'm looking at gold here, and I'll just open the 5 minute chart. Actually, let's keep it on 1 minute to paint this picture. So if I have this open here and I take out my drawing tool, if I see gold push up into here and it fails to take out these highs and I see price action develop like this, now that tells me is that, hey, we are now setting up for this positioning to go potentially push down. And then you enter your shorts. Let's say once you confirm structure has shifted in the lower time frame, and then you see 15-minute, 30-minute start turning, and you enter and you let it go. You let it go, you let the worry go, and you let the intraday positioning play out. Whether this plays out in the next few hours, whether this plays out in the next 48 hours, my positioning is in. I don't care if we push up into here and my stop loss is just points above it. All I'm going to care about is whether I'm in this position or not. If I take a stop loss, I move on. If I'm in it, I wait it out, right? But you're aligned with the day trading bias. You're aligned with the market sentiment. You've mapped out potential technical areas, and now you've taken an entry there. That's what it's about. So that's what I'm waiting for. That's what we talked about on ES, on gold. Complete market breakdown. Thank you so much, Kevin, for guiding us during the inflation data. You're a fucking rock star, man. So keep killing it.
It's all a team, man. Market in the morning, market, AI. It's all a team effort. You guys on the back end are freaking killers when it comes to coding, when it comes to putting together beyond useful. This is the most useful, most helpful platform for all types of trading. Whether you're a trader who trades economic data, you're a trader that trades headlines, you trade just basic fundamentals, you trade currencies, Forex, futures, you name it, market is giving you the insight that you need, that if you ask ChatGPT, it's going to give you the wrong info.
100%. 100%. Like, look at this. Like on the chart, you can see annotations like here. Gold drops as dollar firms. Where is it? Gold drops as dollar firms on Gulf tensions. You click this, boom, Iran strike headlines reverse into sharper risk off gold liquidations. And here's the headlines from 13 hours ago. Right as soon as it dropped, unnamed military source claims U.S. forces fired near Bandar Abbas after IRGC confrontation with U.S. tanker in Strait of Hormuz. Like, this is what's moving the markets. That's why gold sold off. So join us every day. We're going to break it down. We're going to show you what's happening, and we're going to keep building the best trading platform that ever exists. So thank you so much for your love and support, guys. I appreciate it.
That is awesome. Being here, guys. Nawab, you get on out of here. You enjoy the rest of your day. Thank you for the insight.
Take care, guys.
Appreciate you, brother. Guys, I will be here for a little bit longer. We'll run this for another 20 minutes or so. So any questions, please feel free to let me know. We have our market dashboard up right now. And take a look, guys. It looks like we're getting a little bit of a move here. Iranian lawmaker says most proposal accepted in talks 5 minutes ago. Look at our markets right here. Bang! Look at that smooth, strong run up here off of that headline. That's why we like to use market, guys. And that's right off of that. Look at this, man. 75.25. Guess where our bottom tick was today? 75.25.25. Talk about a freaking killer level. We ended up sweeping these highs. Just like I mentioned before, though, we do not want to take the breakout of these highs. That will set you up for a bad position. Yeah, 4-hour time frame insights. I got you. Absolutely. It's extremely. I'm glad you mentioned that, right? It's extremely important to understand higher time frame insights, as that will give you a lot more clarity than being so zoomed in on a 5 minute and a 1 minute and a 15 minute. Don't get me wrong, guys. We're day traders. We want to be looking at the 5 minute and 1 minute and everything, but understanding the higher time frame, we do want to look at a 4-hour, a 1 hour, and things like that. ES just made a brand new all-time high off of that headline, guys. Again, another fantastic reason. No, I'll pull you back on. Did you see that?
I had to jump back in. What did we say? That price point was going to come so soon if we got one single headline in. And there it is. There's that pump into those highs that we called it. Straight from 75.25. Come on. That was such a clean trade idea call from 75.25 right back into all-time highs. Come on, guys. Give us a round of applause, all right? Give us a round of applause. Same with gold. Gold is above that price point that we were watching for sales. Gold is right now above that 60s. I'm not even in a position right now. I'm just watching. So as soon as I got off and market pumped, I was like, bro, I have to jump back in. So this is that exact place we were talking about. Boom. If you were in those buys from the lows, you just killed it. You just made your profit. Take your profit. This move may get faded out if we don't break above these highs. If we break above these highs, look at market's target for it is 76.05 on ES. That is the area we'd be looking out for, right? So 76.05, we'll be looking out for that. Now, keep in mind, you don't want to be buying into these all-time highs, right, Kevin? Like that's the last thing you want to be doing is buying into these all-time highs. So remain vigilant, practice patience, understand that, hey, we just tapped these highs based off the headlines that came in. Positioning now would be bad if you were to jump into buy. So be patient, wait for a pullback, wait for a new high to be formed, retracement, and boom. Now we rinse and repeat. So I'm going to get out because I'm late to my meeting, but
Sorry I'm late. I had to tell everybody that I'm the freaking man.
I had to tell everybody that what me and Kevin were talking about just played out exactly. And that's why we're going to be doing these till 10:30, because moments like this, a lot of these moves happen later in the session, and we're going to be here to call it out. We're going to be here to tell you to take profit, and it's going to be a good time. So see you later, guys. Peace.
It's going to be sick. Peace out in the lab. Appreciate you, man. Thanks for setting us up with a killer setup, man. What a live stream. What an event today. What a headline. And guys, this circles back to where we were earlier in the day when I told you when you're trading, you're day trading, right? You have your trading view chart up. Let's say you only have one monitor. Myself, I've got 4 screens, right? We're sort of like I was going to say a spider. That's 8 legs though, but 4 screens. We have our ES and NQ. I have another monitor to keep an eye on equities. That would be NVIDIA, Google, Apple, Amazon, because I'm trading the S&P and NASDAQ. So if those are trending, it gives me good insight into the overall trend of the market. Bookmap, and of course the execution screen. But if you only have one monitor, guess what? You could turn that alert on for market. And this headline that came out 9 minutes ago, you would have seen that 9 minutes ago. And let's see where we were 9 minutes ago. Ready? Here we go. We're at 10:07. That was before this headline. 9 minutes ago, guys. That was over here. You would have seen that headline before that move actually took place. That's the power of market. That's the speed of market. That is mind-blowing right there, that we have a platform that's not $10,000 a year. It's not $1,000 a month. What, $60 a month? $50, $60 a month for this, guys? Come on now. This is practically free for that price. It definitely pays for itself given the opportunities that it presents and the speed that these headlines come out in, market not missing a beat on them. So really great there. We're going to bookmark this one as well. And same deal, guys, is if you don't know, is this a true headline? Is this something valid? What do they really mean by this? Brain icon, it's going to tell you. Or you could also look right underneath, which also gives you a brief description. Amid active U.S.-Iran strikes, confirmation that most proposals are accepted signals de-escalation and deal progress. That's huge, right? The headline signals progress in Iran-related talks, likely about nuclear and sanctions issues, reducing tail risks of escalation and oil supply disruption. Let's not forget about our oil, ladies and gentlemen. Let's see that oil drop. Ready? Look at that oil drop right there off that headline. Again, same situation, guys. That was about 9-10 minutes ago. Well, guess what? 9 minutes ago, 10 minutes ago, we were up here. You would have been able to catch a 3% drop on oil. Mind-blowing plays and mind-blowing opportunities. These are not opportunities that present themselves every day. These are opportunities that present themselves when markets give us the opportunity themselves, right? When the economy, when the headlines come in. So fantastic, amazing episode today. Really killer, stellar episode. Great trade setups, great plans, great everything overall. Let's see where gold is at. Gold is crashing through. So let's see how gold wants to react to this recent high that we just swept. This would be where I would want to look for a reaction on gold to the downside if we can reverse. Now, of course, those de-escalation headlines, if they do want to hold and gold's reaction was bullish, that could completely deviate from this possible short setup. Why? Because it was headline driven, right? And we always talk about this in the market in the morning episodes. Markets do not reverse for no reason. They reverse off of catalyst. Gold has been trying to move lower. It is currently over 20% from its all-time highs. Well, guess what? For gold to reverse back bullish, we need a catalyst. A strong catalyst could be the war coming to an end with a peace deal or something to have that follow through. Now, I mentioned earlier about I don't believe this war is going to end anytime soon. This proposal, it has to be accepted through Trump. We also have to remember, too, this is not just the U.S.-Iran war. This was the U.S. Israel-Iran war, right? This was a combination. It was the three countries, US and Israel, working together against Iran. And guess what? Trump could get the deal, the proposal, and he could go, well, it doesn't say anything about nuclear. I don't want you having any nukes. And he could dismiss it. He could rip it up, and we're right back to where we started. So that's why we have to be extra careful and extra patient. But holy cow, man, this has been like an episode for the greats for market in the morning. Look at this. We're getting the rejection level off of 4,500. We're getting the rejection off of that recent pre-market high we had over here. Again, possible trade setup on gold here. To the downside, I'd really only look for a pullback here. I don't know if I'd really be in for a huge sell-off, but we have to remember too, right? The whole saying, when in doubt, zoom out. It doesn't just mean go like this. It also means look at a higher time frame scale, hourly time frame, 4-hour time frame. Okay, well, look at our hourly. This was a support zone right over here. We're going to make it blue so it sticks out for us, and we're actually going to delete this old one right here. This was support here on the hourly. On May 17th, it was support on May 19th, May 20th. It was pretty close to support 21st, 22nd, again on the 26th. This is a major area right here that look at how price is reacting to now, giving us a rejection. So it was a higher time frame support turned into resistance. It was a pre-market high that we just swept and started to reverse on, and we have a lot of volume coming into. So this is looking like a pretty solid short setup on gold. Keep an eye on that. Would also keep an eye to make sure the dollar tries to reverse back higher too. But looks okay on gold shorts there. If you do take this trade, make sure you size accordingly and size appropriately. You do not want to jump into a trade risking $500 if you have a $1,000 account or a $2,000 account, right? You want to trade appropriately towards your size and your risk management. When you take a trade, you have to be prepared to take the loss. It's, again, as funny as it sounds, when you take a trade, I shouldn't want to take a loss. No, you don't want to take a loss. You want to be ready to take a loss. Because if you're ready to take the loss, you're ready to take your next trade too. Because if you do take that loss, and let's say you oversized, guess what? You're going to feel anxious. You're going to feel aggravated. You're going to be upset, flustered, whatever word you want to use. And then your next trade you take is going to be FOMO. It's going to be a revenge trade. It's not worth it. Let markets come to you and trade them off your levels in your pre-market plan. That's what keeps you in the best mindset to continue trading. Look at this. Even ES rejecting. This is a level and an area, the 65 zone that Imre and myself called out yesterday. Look at that, right off of all-time highs. So this is a great example of why we don't take the breakout of all-time highs to go long. Look at the last time we broke out. This was an all-time high right here, and we had a huge sell-off from there. Now we're getting the break of an all-time high, but this break is different. This break has the news candle with it. It has a catalyst with it. So even though we're pulling back here, I wouldn't think that this is going to be our reversal that takes us all the way down here. Now, does that mean it's impossible? Absolutely not. Anything is possible in the markets. The question becomes, is it probable? Is it probable that we just made all-time highs and then we want to sell off over 60 points to make a new lower low now? No, not really. It's more probable that we pull back and we hold our more recent low, right? Our more recent low now lines up at 75.25. So if we do want to pull back somewhere, again, we're looking for longs. We're looking for buyers to support price. Really great news, really great markets, great conditions, and really great example today of how you can use a tool like market to gain an advantage, to have proper insights, and everything else in between. Oh man, bro, your target had slippage. I hope you were able to get out in some nice profit, man. This has been a phenomenal stream, guys. If you have any questions, please feel free to let me know and drop it in the comments below. We're going to be doing these streams, guys. Right now, Market in the Morning is Tuesday, Wednesday, Thursday. I host each show. I either host it with Jeev, I host it with Nalab, or I host it with Imre, and we go over the markets. We give you guys some actionable insights and trade setups, really setting you guys up for the best success. I don't see why anybody wouldn't want to come join a free show like this every Tuesday through Thursday. Iran commits not to pursue nuclear weapons. Guys, this is a headline that we go, holy cow. This is something that we know has been an issue, right? The biggest issue, one of the main reasons there hasn't been a deal is because Trump did not want Iran to pursue nuclear weapons. This right here can be a nice push and a nice ease into a new regime and stronger continuation and a much stronger possibility that they accept this deal. Iran has already accepted most of the proposal. Now it's up to the US. And again, Israel too. Israel comes out and says, we don't really accept this deal. It's not what we were looking for. We're going to attack again. It's going to be tough. But the source is Exos, not trustworthy. Okay. Well, that source is just for this one right here. Our main source for our market terminal is Reuters. So Reuters is an extremely trustworthy source worldwide. Really a very strong source. It's why we chose them. So they could have gone through Reuters as well and got approved. But really interesting. That's about the U.S. naval blockade. This was most likely from Reuters. I'm sorry, Reuters, not Reuters. Reuters. Yeah, bro, no days off is a fact, man. No days off. I enjoy trading. I enjoy markets. I enjoy what I do with you guys. So that's why I always encourage you guys, smash the like button. Keep running it up. Share it with your trading friends, your truddies. Have you guys ever seen that term? Your trading buddies, your truddies? Share it with your trading buddies. Let's make this a community, an engaging community. Have conversations with each other in the main chat, right? Introduce each other, know each other. You guys all trade mostly the same assets, whether you're trading S&P, gold, NASDAQ. These are the primary three that most people trade. Yeah, if the headline comes from Iran officials, then I will give it more importance. Yeah, so we'll see. Again, main reason why we keep an eye on these headlines, right? Can we get another headline that comes out from Iran officials? Now, the one we did get 19 minutes ago did come from their lawmakers, right? So that does hold stronger clarity, stronger confirmation. So very important. We see markets are continuing higher. And let's take a look also. See that gold is struggling. We mentioned before, gold, a short position on gold after the sweep was looking like a high probability setup, but with a catalyst like some type of news or some type of inflow or some type of peace deal being accepted, that's a strong enough catalyst that could shift markets into the opposite direction, especially on something like gold. VIX below 16. What's up, man? Oh, you lied. All right, you faking me out, bro? I was right about to pull up the VIX. Let's see. VIX very close to below 16. Take a look at that, guys. If you trade the ES and NQ, obviously you have to have a tool like Market, right? MRKT. But from a day trading standpoint too, you also want to keep an eye on the VIX. If VIX is making a new low of day like it has been since 9:45. That gives you insight that there's stronger buying activity. And guess what? 9:45, that's when we started to reverse back higher and really start to trend. So you could have even taken it off of the reaction off the 250s that we had and really rode this to a killer move. It went right to its previous day high on the ES, and it did reject since then, but it's really just pulling back. I do see this as more of a stronger, more compelling reason that markets are going to stay bullish. We're bullish until we're not. And guess what? We still are. We had a fair value gap area in here, right? A volume imbalance, had a gamma level there. And look at that volume imbalance marked with that gamma level, marked with our strong bullish fundamentals and headline. That there goes our and theory. I mentioned that earlier, guys. When you're trading, you don't want to say, oh, well, if this happens, then maybe this will happen. You want to be going through your confluence and going through your trade saying, and. We have, just like I was just saying before, VIX is moving lower, new low of day, great. And ES is still bullish on the fundamentals, great. And ES made a higher high on the higher time frame, great. Right now, you're stacking confluences. When you stack confluences, you're separating yourself from the traders that just see a candle moving higher and buy it because they feel FOMO and want to get in. versus the traders that actually trade with a proper edge. As a trader and as a successful trader, you want to trade with an edge. You do not want to trade with FOMO. You don't want to trade with greed. These are all emotions we want to stay out of. We want to be able to look at charts with the most non-biased view possible, where we say, okay, ES was trading down here today, but I know we're very close to all-time highs. So I don't want to be so quick to jump in shorts. I'd rather wait for markets to base out and then reverse back to the upside. And that's exactly what we did today. That 75.25 level was mint. Absolutely beautiful level called out by Nalab today. And it's the same level he called out on Tuesday that worked on Tuesday too. So guys, keep trading, trade the patterns that we're seeing, trade the repetition that we're seeing with markets and everything else, right? We want to come back and make sure our trading system is repeatable. When you try to become a trader, you don't want to just grab whatever trade or strategy hop. You want a consistent system so you could be a consistent trader. Routine equals consistency. Cannot stress that enough. Guys, if you haven't already, smash the like button, drop a comment, hit the share button, whatever you got to do. Show some love, show some support for these free episodes we do Tuesday through Thursday. And guess what, guys? When we have economic news, we have non-farm payroll on a Friday, let's say, or unemployment, we're hosting a special episode of Market in the morning anyways, right? I always want to make sure I'm here for you guys to set you up for the best success possible. And that's what our whole team does here at Market, is to set you guys up with the best advantage, right? We want to trade with an advantage and an edge. We don't want to trade just guessing. So guys, that's our episode of Market in the Morning today. What an absolute amazing episode. It is 10:30, much longer than we usually run, and we are going to be continuing these Tuesday and Thursday episodes until 10:30 going forward. So I really hope you guys enjoyed it. Absolutely amazing episode, amazing price level reactions, and great trades. So again, smash the like button, share it to your Instagram, share it to your Twitter, share it wherever you got to share it, but show some love, and I will see you all next time. Take care, everybody. Peace.